I'm Basil and I've been a technology journalist for over 10 years, writing for titles including TechRadar and Wired. In my time as a journalist, I've seen Huawei flourish to become the incredible innovator it is today. With Huawei taking pole position as the world's #1 smartphone manufacturer in the last quarter, it shipped more devices than the competition. And its software solution, powered by Huawei Mobile Services, is fundamental to its success. Developers are at the heart of the ways Huawei delights its users, and that's why Huawei's annual Apps Up competition is so important. Apps Up has compiled a diverse judging panel, from technical experts to industry experts through to venture capitalists. The Apps Up journey and Huawei's relationship with its developers is more than just a competition though. That's why Huawei gathered its experts to share their expertise in this Q&A with you, in the hopes that you can gain valuable insights as to how to grow and scale your business and what to look for in the future. Paul Bazin. Based in Paris, Paul has been at Daphni Ventures since 2016. There, he sources startups to invest in, specializing in mobile apps, hardware, AI, robotics, and delivery. Before joining the VC world, Paul was an engineer and a business school graduate. Now we'll join Paul in Paris, where he can field some of your questions. For B2B companies, how important is it to show revenue growth before product market fit?
So for B2B companies, the most important point before the product market fit is for us to know if your customers are willing to pay for your product. It's okay if you have a linear growth, the product market fit is typically the tipping point of your growth that make it from linear to exponential.
How do you ensure a company is fit for VC funding?
I think the most important thing is the project and entrepreneurs' ambitions. They need to want to really scale rapidly, to have a huge market opportunity. VC fund will seek for a 10x investment in your companies.
What metric are you tracking when considering an investment?
It really depends on the model of the company we are looking for. For instance, on the mobile app, what we're going to look at is the usage KPIs. So how many time the users spend in the app, how many daily active users, monthly active users you have, what's the churn, what the acquisition cost. But it's going to be totally different metrics if you look at a marketplace, for instance, which would be more in terms of GMV, turnover, what is the balance between the supplier and the demand.
How do you mitigate risk when investing in startups?
The strategy of a VC fund is to invest in several companies. The average results for a typical VC fund is on 10 investments, you will have 50% of loss, 40% of companies that will give you back your money, more or less, and then only 10% that will make you earn money. It's more a portfolio strategy more than mitigated risk on a specific startup. But of course, you really need to strongly believe in the vision of the startups when you make the investment.
Name 3 tips for pitching for investment.
The first thing you need to do is to bring the investor into your story, to make him really enter it and believe in it, and to really be natural. You start about yourself and what brought you on your subject, on your mission, and that will derivate to the mission itself. That's where you can bring the investor to believe in why the mission is so important, and they would really need to invest in it.
What are the main qualities you look for when investing in startups?
On the entrepreneur side, we would like someone with a vision, ambition, who is reliable and who is able to execute well. On the company side, it would be the market size, competition, the value proposition of the product, and if the product is scalable itself.
How active a role do investors typically play in companies?
Depending if you are a follower investor or a lead investor. At Daphni, we are lead investors, so it means that we want really to be part of the decision on the long-term vision and as well as the discussion on the short-term execution. So we ask for a board seat to be in the discussion. We will bring all the network we have directly to the entrepreneurs. And then it depends if the entrepreneurs want our support or not. A second-time entrepreneur will not call us every week. First-time entrepreneurs, I can have him on the phone twice or 3 times a week.
What's the best way to attract early-stage investors?
Best way is to find someone in the VC network and to have a warm introduction from them. Because every time we have a warm introduction from a trustee, we will meet the entrepreneurs. And then, if you can't find any, there is the events where the investors are, and LinkedIn call introduction with your pitch deck and 3 lines on your project.
How did you transition from engineer to investor? And what was your motivation?
I was, stopped at the end of the prototype and I couldn't be able to sell it. So I wanted to know what was behind building a prototype. So I went to a business school to know it. And then as 60% of the student now, I wanted to be an entrepreneur. And to be an entrepreneur, I thought the best idea was to go to a VC fund to know what was the best thing to do and then not do. And then I read Daphni, and I think I'm on the good side of the table, so I stayed. Thank you all. I hope it was helpful, and I can't wait to see your entries.